Is it a good time to buy a home right now? Should I sell now or wait? What's going on with the Santa Clara housing market? If these are questions that are on your mind, you'll want to stay tuned for the Santa Clara Housing Update. Hi, I'm Vinicius Brasil, the Santa Clara real estate guy with the Brasil Group and Keller Williams, and welcome to another Santa Clara market update where I discuss what's going on with local real estate, recap recent home sales, and make some predictions about what to expect moving forward. First, here's a quick summary of what's happening around our local market. The number of home sales has been dropping recently, which is typical for this time of year, but significantly lower than previous years. Home inventory has continued to rise. Interest rates have recently dropped below their 7% highs. The stock market has been rallying above their lows for the year, and several tech firms around the area have announced layoffs, and that may be affecting our local market. Let's recap last month's sales figures. Every month I publish a market update on my blog, SantaClaraRealEstateGuy.com, where I recap the previous month's sales, talk about what factors are affecting our market, and make some predictions on what to expect in the next coming months. So here we are on my site. And really quickly, I just want to review what we saw in October. Last month, October, we saw 35 single-family homes that closed escrow. This was 17 less that closed escrow in September, which is typical. As we move from September to October, we're going to see less sales. We're going to see less sales in November than October. And of course, December tends to be our slowest month of the year for sales. So this is pretty typical. What isn't typical is that that's a pretty low number of sales. Last year in October, just for some perspective, we had 61 homes sell in October. So as I mentioned before, we have less sales volume happening right now. So the market is considerably slower, less buyers out there looking, and of course, not as many home sellers as in the past. Now, the average price of a home sold in October was about 1.56. That was $176,000 lower than November's price point of 174. The median price of a home sold was 143 in Santa Clara. That's about $220,000 lower than September's figure. Now, prices haven't really dropped that significantly between, I would say, October and September. And one way I can tell is if I look at the average cost per square feet, it increased from $1,079 per square feet to $1,143 per square feet. So if the price of square feet is increasing and the median or average price of a home is decreasing, what that's telling me is there's smaller homes or more smaller homes that have been selling on the market relative to larger homes. And smaller homes, of course, are typically going to sell for less money, but smaller homes have a higher price per square feet. So I wouldn't look at that figure and I wouldn't say, wow, prices dropped, say 10% last month. That's not the case. They may have settled a little bit lower. It's hard to say because some homes actually sold pretty well, and I'm sure there's some other homes that sold quite low. And we'll talk a little bit more about why that's happening, right? So on average, the homes that did sell sold about 1.75% over asking. And that's fairly typical in our market. Homes do sell over asking. That's because we typically price them really competitively with the expectations of them selling over asking. And here's what I think is one of the more important figures that I always follow, which is inventory. We started the month of October with 39 homes on the market, and we should have saw less homes on the market at the end of the month, but we actually saw more. We ended up with 43. So not a big difference there, but the fact that we have more homes on the market right now in November than we did at the beginning of October is a sign that the market is really slow. Now, there's a really cool infographic here that kind of summarizes some of these points that you can look at. But overall, it's very obvious that the market is slowing. We're not seeing as many sales happening that we've had in the past year around this time frame. And the reason for that is people are proceeding cautiously. Obviously interest rates are up, stock market has been down, so that's going to affect affordability. And the general consensus, if you're looking at economic data, is that things are going to get a little bit rougher in the next months ahead. And maybe you're concerned about buying a house because you think prices are going to fall. And if we're thinking of selling, maybe you're deciding not to sell because, well, the market's not that hot and you feel like you're not going to get that great of a price. So these are some of the narratives I think that are happening a lot with some buyers and some sellers. But of course, I'm sure there's a lot of other factors there affecting both those parties. Now, one of the other things that I like to look at is Altos Research. These are specific reports that we pay for. We share them with our clients. If you're interested in subscribing to Altos, I'll provide the link down below. But these reports can get emailed to you every week, every 2 weeks, every month, every quarter. But the really cool thing about these reports, you can get them for pretty much any city in Santa Clara County, any zip code in Santa Clara County. And I do recommend you get them at the zip code level because your data will be a lot more specific. Now, there's a lot of stuff in here. As you can see, there's trends for median price, price per square feet, average days on market, and all these details. So if you want all that information, you can get it. But as you can see, some of these things can be misleading, like we just noticed above, where I was talking about last month's sales and how last month's sales figures were different than the previous month's sales figures to that. And it didn't quite tell the whole story. So one of the things that I do encourage my clients to look at is the Market Action Index. The Market Action Index, it's a proprietary metric that Altos Research uses, and they basically take a number of factors, and they have an algorithm that they use, and it really just determines the strength of the market. So right now, the Market Action Index is at 62 for Santa Clara. Now, you can look at this trend line and you can see where it was. As of September 23, it was all the way at 70, and it's settled down since then. Now, if we could go back a little bit further, which we can, because if I go over here and I look at the Market Action Index, and this is going to be a pretty weird graph because it goes all the way back to 2019, but even recently, the Market Action Index was up to about 98 here. In September. If I go all the way back to, let's say, April, it was 96 or 100, right? So, this trend line shows you about 3 months worth of activity. And you can see that the market tightened up around August, and the market did improve for sellers. And the higher the Market Action Index, the more of a seller's market, or the stronger seller's market. And if the Market Action Index is dropping, that's showing that the market is getting weaker for sellers or more favorable for buyers. And here we are at 62, and you can see it just gradually trending downward from the recent high of 70. But as of April or May of this year, it was as high as 100. So, things have slowed down. It's taking into account inventory and homes that are sitting on the market. But it's a great thing to just get an email every week and take a look at that number and see if that number is dropping or going up. It'll give you an indication of where the market's trending, right? Another thing I want to show you is we're talking about inventory. This is the inventory for Santa Clara. Here we are right around December of 2022, and you can see where the inventory levels are. It's right here at this diamond point. And if I kind of scroll down over here, I'll see December of 2021. So right around this time last year, the inventory was quite much, a lot lower. Down over here, let's say around 20, for the number of single family homes on the market. And you can see we're hovering around 40. So we're about double the amount of homes on the market right now as we would have been last year and even in previous years, because as we get into December, the market really tightens up. There's not many homes on the market, and whatever is on the market isn't very good. And we see that happening all the way through December until January, where the market starts to ramp up and we see more homes. So what is that going to indicate for us? Well, if the inventory levels are at 40, and I'm not sure if they're going to stay there, I think there's a good possibility that they may settle down as we get down to Christmas, but they're not going to settle down a whole lot. And here's what I'm seeing right now. This is what's on the market right now in Santa Clara. So we've got 46 homes, as you can see. Some of these are coming soon homes. They haven't quite hit the market yet, but they will be coming on the market soon. And you can see right here, there's 46 homes, on or off the market or coming on the market soon. And a lot of these, if we look on days on market, we'll see, more than, I would say, 75% of them have been on the market for 2 weeks or more, right? So there are still some homes that are selling rather quickly. And those are the homes that are priced well, or they're very attractive homes in the most desirable areas of Santa Clara, or they're, very updated and they offer something unique that home buyers are looking for. The remainder of the homes are potentially a combination of homes that could be overpriced, bad location, bad condition, and for whatever reason, buyers are looking at these homes and they're not motivated to buy them, and they're just letting them sit there on the market. So that's the condition of the market right now with buyers. They're not super motivated. They realize prices are not going up, so they're going to be very picky about homes that they're going to be interested in making offers on. So we talked about mortgage rates and where they are, and if you've been following the news, you've probably noticed recently that the Fed again increased their federal funds rate another 3/4 of a point. But what happened shortly after was mortgage rates fell, and they fell pretty significantly. If you look at the graph right here, you'll see what happened. Mortgage rates were as high as about 7.22, and right now they're hovering around, I would say, 6.6. Now, that wasn't because of the Fed. That was because of the most recent inflation data that came out that same month that indicated that inflation had dropped in this recent quarter. And that was good news for investors who felt that if that continues on, the Fed will be less likely to increase rates. So again, the speculation in the stock market is that, the Fed won't continue on as planned. At some point, maybe sooner rather than later, they're going to stop this the rate hikes, and the market will adjust, and of course it'll adjust more favorably. Other big news items are the job cuts that will be affecting our local tech segment. So we've got, of course, Meta announcing big job losses, Twitter announcing, I think, 11,000 or I think 50% of its workforce, and then of course other firms like Amazon, I believe Cisco as well. So there are being job cuts kind of across the board at a lot of tech companies, and this will, of course, affect local market. Will increase pessimism and maybe concerns for certain home buyers who may feel like they may be affected. And one other factor that I'm not quite sure how it's going to directly affect the stock market, because I'm not a big crypto guy and I don't invest in crypto, but I understand that this is a big deal for younger people, and these are people who are buying homes. So FTX, one of the largest crypto exchanges, just filed for bankruptcy. It was rather a sudden sort of thing that happened, and it played over a matter of a couple days. And it's pretty much sent shockwaves throughout the whole crypto world. Bitcoin dropped pretty significantly. It looks like it's pretty stable right now, but a lot of concerns over the crypto space. And of course, people who were invested, maybe had their money in FTX, have maybe lost thousands of dollars, if not more money. So another big headline that has affected, the financial world. So what can we expect moving forward? So if you're a buyer right now in this market and you've been going out looking at homes, you'll notice that there's not a whole lot of great homes to look at. And pretty much anything that does catch your eye is probably selling rather quickly. And that's been the case. So things are still pretty competitive for certain homes. Other homes are sitting on the market. They might be overpriced, or there may be something wrong with them. So as a buyer, do you need to get aggressive in this market? What do you need to do, right? So my feeling is home prices are probably likely to settle a little bit more. I think interest rates did drop recently, but I don't know that they're going to drop any more. There probably will be some more Fed hikes, interest rate hikes, because, well, inflation is still really high. They're targeting about 2 to 3%. We're still up around 6% in terms of inflation figures. So I still think figures or interest rates are going to go high. Also, quantitative tightening is going on. So there's just going to be less money on the market to lend. So these are all going to affect interest rates. So more than likely, we'll see a softening of the market. Obviously, in the beginning of the year, we should see more inventory, more inventory is great for buyers. It's likely going to increase inventory to levels where maybe we'll start to see more price reductions. As of right now, we haven't seen a lot of price reductions, and the price reductions that we have seen haven't been really substantial. Less than 5%, a couple maybe at 10%, but not many. So not many home sellers slashing their prices, not many home sellers anxious and getting ready to, drop their prices significantly to get their homes to move. So home buyers, my advice to you is what it's been for the last couple weeks is, don't stop looking. This is a great time for you to find that right house. In a competitive market, those homes generally get tons of interest. I'm talking, tens of, maybe 20 offers, and they generally sell for record prices in those neighborhoods. Now, those homes are still going to get interest right now in this market, but not nearly as much interest as they're getting, or they will get in, let's say, another year from now, or whoever knows. But when things start to get back to what our normal market's like, which is extremely competitive. So this is a great opportunity for you if you feel like your job is stable. I don't expect the stock market to make any serious drops as well. It seems like it's trading pretty stably where it's at, maybe somewhere between 10 to 11,000 on the NASDAQ. That seems to be where it's found its support. So, if you're comfortable in your job and stable in your employment, I would definitely use this time period to be picky and find that right home. Home sellers. Now, this is a little bit different, right? We're so used to getting our homes on the market, selling them, not having to do a whole lot, multiple offers, getting a great price, and that just isn't the case right now. Now, some home sellers are doing pretty well right now in this market. They're not doing as well as the home sellers did back in April or May of this year, but they're able to get their homes on the market, get them sold. And those are home sellers that have either got homes in very desirable areas, or they're homes that are just desirable just because they offer a decent floor plan, they've got some updates, and they show very well, possibly situated in a nice location, and they just appeal to home buyers. And more importantly, they're just accurately priced for what they're offering, right? So if you do need to sell your home, now is not that bad of a time. I would probably look at putting my home on the market sooner rather than later. I would be afraid of maybe waiting until the beginning of next year if I'm trying to plan maybe in, say, January or February, which traditionally is a great time to put your home on the market. But my guess is inventory will be higher at that time, and we may see better competition. In other words, there may be better homes on the market that are competing with your home. So as a home seller, if you really need to make a move in 2023, you might want to start planning that move sooner rather than later. Now, if you've got any questions about your specific home in terms of how it's going to be performing in this market, maybe where the home value is, feel free to reach out to me. I'm always happy to talk to you. I've had a lot of conversations with home sellers recently to tell them about what's going on in the market, and we've been able to figure out and brainstorm good solutions that are going to work for them. So I'd be happy to talk to you about your particular situation. Thanks again for watching. Hope you enjoyed it. And of course, we'll see you next time on our next market update.